There's a lot happening inside the market, and one of the things to be aware of, it's earnings season again. Some of the largest companies on the planet are going to be reporting their earnings over the next month. Prepare for choppiness. Looking forward to the week ahead in terms of economic news and high-impact economic events, the PPI came in lower than anticipated. Also, the CPI month-on-month and year-on-year is coming out tomorrow. That could very well cause the markets to whipsaw. We've seen big increases in the yields as the threat of inflation is creeping back in. Also, bear in mind later on in the month is the Fed meeting. So there's going to be a lot of stuff happening this month. Prepare for choppiness. In around 14 days' time, the probability of a 25 basis point decrease is just 2.7%. The overwhelming majority of traders and investors are anticipating that the Fed will not cut interest rates. The narrative of massive liquidity injections into the system is evaporating. A lot of people are hoping for interest rate decreases, of course, because that decreases expenses in terms of debt servicing. And companies have billions upon billions of debt servicing dollars that they need to come up with. There is the probability we'll get less than 2 rate cuts in the next 12 months, and the vast probability is pushing towards rate increases as the economy strengthens further. This will create a lot of volatility inside markets. Before yesterday's session and prior to yesterday's session, the market looked like this. In the past session, the market has changed around. You can see the banks have benefited. Tesla and Nvidia, Meta and Eli Lilly are down. But there's definitely green in the market. Across the crypto market, in the past 24 hours, we've seen some pretty good performance. We're looking at Ethereum coming up by 3.2%, Bitcoin by 2.41%, XRP, Doge, Link, Solana all did quite well, as did ADA. Masterclass students, if you refer to TM4, you have this chart. And when we look at inflation expectations, inflation is getting baked into the economic system. This is exactly why yields are increasing, as is the DXY. And Masterclass students, refer to LV19 to look across the entire global market. We can see Russia's market has been coming up. The UK's market is doing a CU at the moment. It's a cut under. China's market is weak. We can see the Aussie market is flatlining at the current time. It's sitting literally on a razor blade, showing weakness. Japan's market is notable. It's cut under, it's got negative price momentum. You need to be aware of what all of the other major indices are doing at the current time. Germany's economy doing quite well. Taiwan's looking a little bit shaky. One thing that we need to look at today is obviously the Nasdaq and also the S&P 500. They're looking particularly weak. Bitcoin is retracing, but it's very common to see these retracements. They're just channel retracements. So it may mean nothing more than finding a lower high and resuming back down again. For students of the Profiting from CTKS Method structure course, this means absolutely nothing because we can make money in any market condition. And just to let you know, Week 4 will be released tomorrow. There's a lot of stuff in here, and this is all about keeping your money that you earn from the culmination of Week 1, 2, and 3. And thank you so much for everybody who's reached out and said the course is really, really helpful. That's beautiful. In other words, market turbulence means absolutely nothing to us. We look at the markets from a BORSOG perspective. What is BORSOG? That's buy on red, sell on green. And of course, this is a one-day chart, but you can make a huge amount of money going long at spot. It's incredible and it's very, very profitable. And you can do it in any market condition. Consolidation, downtrend, uptrend, it is irrelevant. We're noting that some of the global market indices are weakening, and we can see why. The VIX continues to push upwards. This red line is the inverted VIX. This line here is the put-call ratio. People are very bearish inside the market. If people have a contrarian view, they say, this is fantastic. This means buy the dip. I wouldn't suggest that at the current time. We're always BORSOGing, but BORSOG is active trading, or it's structural passive trading. Personally, I look at Bitcoin and I see that it's retracing, but it is very elevated still. If we got a big wick down, that creates enormous profitability opportunities. There is no doubt at all the upward trajectory of Bitcoin is going to millions of dollars plus. But that doesn't mean it doesn't retrace and doesn't retrace wildly. So you must understand the market momentum, direction, and structure of all of the markets, because Bitcoin is the most sensitive to movements in and across markets. In order to profit from market volatility, you must assess the direction, momentum, and structure of the markets. To do so, we have all of the different rows of the cheat sheet. It really matters. You can get the watch list for the CTKS Method service and all of the rows from the link in the description of this video. We can see in row 1 that the VIX came down, and that's of course fantastic for markets. That will push markets up, especially the risk-sensitive crypto market. We saw also that the wrecking ball, the US dollar currency index, or the Dixie, the DXY, came down slightly, but it is very elevated. It's it's in excess of 109. We saw the gold and silver plays did quite well. We expect the commodities to do well in high inflation zones, so please bear this in mind. The S&P 500 eked out a small gain, as did the Dow and the Russell, but the Nasdaq got a bit of a decrease. Not too much, but certainly was one. And we can see there's a follow through in terms of the futures on the Nasdaq, and a follow through inside the S&P 500 futures, the Dow futures, and the Russell futures. One thing to keep in mind, when you have high volatility stocks, you really want to keep your eyes on them. They can tell you a lot about market health. And there's no better thing to look at than the crypto market. It is the canary in the coal mine. And we can see that crypto just eked up a very small gain. For us, this is a small gain. A larger gain is 10%, 20%. Crypto is not like the stock market. It is exponentially volatile. We can see the stable coin flows are towards the crypto market and out of stable coins at the moment. Looking through row 6, row 7, and the memes, it's very minor increases in price. The real thing that we need to look at is row 1. The row 1 references especially the CBOE one-day volatility index that has spiked. That means that there's potentially more VIX upside action to come. We must look at the VIX. I share this chart inside the profiting from CTKS method structure, and of course the levels of structure are underneath inside the indicators on each chart. Now, what we see here is the US 10 has been just pumping up very strongly. Just note this, when you get a big increase in yields, that puts negative price momentum into the markets. And this is a very important thing to understand. If you see a spike in yields, expect a down spike in the crypto market. One important thing. And also, we're witnessing a lot of inversion when it comes to the DXY. Now, what that basically means, if I invert this scale, you can see that Bitcoin is moving in directional correlation with the DXY. That's what we would anticipate. That is generally what it does. Also, the VIX does the same. So when you see the directional momentum, it doesn't have to overlay. What you're looking for is the directional momentum. Okay, let's flip this guy back. Now, what are we seeing inside row 1? It's pretty obvious that the VIX is currently basing. If it takes off again, it's going to slump crypto prices and stock market prices. Please be aware of this. Gold could benefit, of course, but just please be aware. When we look at the US 10-year yield and the US 2-year yield, the DXY, dollar yen, and also oil, which is inflationary by nature, we can see that they all have positive upside momentum. Now, what's the relationship between row 1 and Bitcoin, which is the canary in the coal mine in terms of risk? It's inverse. Now, what does that mean to you? If we see upward spikes in momentum inside the VIX, expect a sell-off inside the stock market and also crypto. That's why I showed you a view across global markets. Other global markets tend to feel it first. And you can see that the yield curve across all of the yields are just coming up. The VIX futures are looking like they've done a little bit of a retracement. That's what caused this really minor upsurge in crypto. And you can't call it an upsurge because it's just tiny. But if it does something like this, please be aware that means negative price momentum across the stock market and also crypto. Looking at row 2, it's important to look underneath the headline figure to try to figure out what's going on. We've seen that junk bonds has been making its way down and it's pulled Bitcoin with it, just as the inversion of the VIX has also pulled Bitcoin down. We have confirmation between row 1 and row 2 that the markets are in a downtrend. So if you're YOLOing or FOMOing, please be a little bit careful. You need knowledge. You need knowledge in all things. If you're going to do your job and you don't have knowledge, you're going to get fired. If you're doing study and you don't have knowledge, you're not going to pass the tests. It is no different inside financial markets. If you're not looking across the row 1s up to the row 7s, you're in a lot of trouble because you can't figure out why the market is doing what it's doing. So we have confirmation between row 1 and row 2. We've just got a little bit of an uptick, but we're in a downtrend. And it's not breaking any particular trends from a very short term, recent indicative price perspective. We can see that gold is coming up. It's showing a little bit of weakness at the current time. Silver is showing weakness. This is a cut under. So this means we could potentially form lower highs as we come down. So what does that mean for the euro dollar? You can see it's coming back into directional alignment, as is the Aussie dollar. We've been waiting for this since November. Also, the index futures are in a downtrend, but the Russell is showing signs of life. One of two things is going to happen here. We're going to get a pullback in the Russell. It's going to find support and go higher and break the trend and create positive momentum, or it's going to fail down. We must keep our eyes on the market at the current time. It's very important. The good thing is that when we zoom out on Forex, the US dollar currency index, even though it is going up, it's starting to lose a bit of steam. If the DXY starts to come down, that favors an increase in the major indices, an increase in the junk bonds, which is a very good risk tracking metric. Also, the euro dollar coming up, the Aussie dollar coming up, they're fantastic things. That's what we want to see for stock market and crypto appreciation. Having been inside financial markets for nearly 4 decades, one thing that I've noted over my life, people are very resistant to change. People hate change. They want everything to stay the same. But of course they want variety, so they do want things new. But when it comes to financial markets, people just don't get what Bitcoin is. Bitcoin is a new asset class. Of course, it threatens the establishment, the existing system, because it's the next iteration of the internet. Web 3.0, the internet of value. But of course, even people in the IT space, some of them don't even understand this. That's okay, that's kind of normal. IBM is of course a computer manufacturer, but Thomas Watson Sr., the then senior CEO, in 1943 said, "I think there is a world market for maybe 5 computers." Yes, he did speak like that. Oops, he was wrong. But surely these IT guys just don't get it wrong. What about Bill Gates's comment? Bill Gates said, "The internet is just a passing fad." Nah, he doesn't talk like that. Now, why am I showing things like that? Because Bitcoin and crypto is here to stay. And a lot of people say, oh, it's rat poison, it's a fad, it's a bubble, it's a tulip, and those people are missing the point. They're like Thomas Watson Sr. from IBM talking about 5 computers. Oh, there'll be 5 computers in the world. Or Bill Gates saying the internet is a fad. Please be aware of this, but it won't stop people from saying it. You can choose to listen or you can choose to profit. In terms of past cycles, when we look to the 2016 cycle, we're getting a little bit of a confluence. We had a little bit more downplay than we would have liked. But everything is about economic conditions, and the past cycles do not have identical economic positions. So that's why we get variability in price. So if people say, oh, the last cycle did this, okay, well, the last cycle did that. Well, that's fine. And the 2016 cycle did have upwards momentum, and the 2020 cycle also had upwards momentum. But we have to see how the CPI and yields are playing out. Also, we need to keep our eye on the VIX. When people initially get into financial markets, they think that all price action is completely random. It is not. Price action is the culmination of intercorrelation and interconnection between charts. And the most important charts to look at are row 1 through to row 7. Every single chart is structurally bound, so I'm just going to pop on the structural indicator for Bitcoin. Now what we saw, and I'll just put on some values as well for you. Okay, that's a little bit better. We could see that Bitcoin got above this 91,743 mark, passed through a positive CTKS gap to that 93,656, and then came up to the next structural level at 94,574. It just wandered along and then tried to break out of these 2 structural levels where it's been caught. These are the key structural levels to keep your eye on in the next 24 hours. If we get an underside retest, something like this on the 96,480, that opens up negative structural attraction to the 94,574 and a potential structural overshoot to the 93,656. Now, if that happens, we could waver around here. A lot depends on what the VIX does, so we'll need to look at the VIX's chart. But if we manage to get above this 96,844, the next structural resistance level is 98,384. These structural indicators are part of the CTKS Method service that you can subscribe to at CTKSMethod.org. These lines are very specific. They are not random lines. This is not recent indicative price. 2 levels of standard certification are required to draw these lines. They are the world's most statistically significant buy and sell levels, the most statistically significant support and resistance levels in existence. And when you subscribe to the service, you get all 32 indicators as well. We were looking at the S&P 500 or the SPX in the last video, and I was saying these are the retail levels that people would look at under recent indicative price. And we did a bit of an analysis on this in the last video. This particular price action is less than 0.25% of the price action for the S&P 500. It's simply something that is non-statistically significant. One of the things that Masterclass students and profiting from CTKS Method students and the certification students will understand. We've got a cut over here. The bias is towards the negative side. It is not towards the positive side. This is something that you need to keep in mind. If your bias is towards the negative side, you want to play with lower structural support levels. Okay, let's have a look at the S&P 500. In the last video, I said that people will be looking for a retail level around this 57.23 mark. And I said the support isn't even there. This is the problem. People do not know where structural support is inside the market. They can only do recent indicative price support and resistance levels, which RIP your money. We got a bounce here, which was anticipated because these structural support levels are very good for this understanding. However, please note the S&P 500 is in a downtrend. A permanent one, a temporary one needs to be seen, but it's still a downtrend. In the last video, we were talking about gold having to get through this 2698 area of structural overhead resistance. When there's a lot of sellers there, guess what it does? It pushes the price down to lower structural levels. If you were just looking at gold from this perspective, you would just naturally think gold is going to the moon. It's going to appreciate 2 or 3% in the next 12 months. Whoa! Just stirring. I love gold. I was a gold investor and trader for many years. But the one thing about gold is volatility is not great compared to crypto. That's why I love crypto. One of the things to just bear in mind, if you understood that gold was challenging all of this overhead structural resistance, you wouldn't be YOLOing, you wouldn't be just jumping in, all in and more. You would be taking it easy and observing what price did. When we look at the VIX, it's coming down, it's undercut, this is good. We're seeing negative price momentum, but just be aware that it could find support down here. What happened around this area? There was a lot of overhead structural resistance and a bit of a gap. So it came in, filled it, and then backed off. But that doesn't mean it's just going straight down, as a lot of people think. For example, you could have thought just in here, when the VIX cut under, that's it, it's going back to zero. And that's how most people think. But please don't think that way. It's not the way that the world works inside financial markets. Financial markets are always moving in a wave, up and down. If we come down and form a low here, we could rally up further. That is going to be very dependent on the CPI print. If the CPI print comes in way hotter than anticipated, the VIX will spike. If the VIX spikes, it's going to place a lot of negative price momentum inside not only the crypto market, but also the stock market. And these are perfect opportunities to buy on red and sell on green. But you must know what you're doing. The other thing to note is that when we look at just very short-term support, the VIX is under short-term support. So even if it comes down to here, it's just forming a support level where it could bounce up. It is not over, people. As a community, we absolutely love red price action. It's where we step in and pick up so many bargains. Yes, we literally go shopping when the sale is on. But unfortunately, retail traders and investors, they only want to buy when the price is way more than it should be. In the Profiting from CTKS Method Structure course, I talk about market permission. The market must give you permission to make a profit. A lot of people don't like this idea, but it's absolutely and utterly true. If you do not have the market's permission and the market moves against you, it's because you didn't have the permission of the market. You can't force your will onto the market, as a lot of people think. They think, if I just put an order in, it's going to profit. It doesn't work that way. You must have knowledge, just like you must have knowledge for a job. You must have knowledge to pass the exam when you study. Each and every day, you'll be asked to sit an exam inside the market. Do you understand the intercorrelation and interconnection between charts? Do you understand structural direction, momentum, and how that pushes different charts around? If the answer is no, any profit that you make will be handed back. It is very, very expensive. Talking about total crypto market cap, let's just pop on the structural indicator and see where Bitcoin could be going. Hang on, Ken, what are you talking about Bitcoin for? I thought this is total crypto market cap. Yes, indeed, my friend. And we know that no alt can escape Bitcoin's gravity, but total market cap and Bitcoin work together. Now, what are we looking for right here? We're seeing a bit of a sell arc here. We may get a retracement down to this $3.27 trillion mark. If we get a confirmation of support here, we could blast through. The other option is the sellers are very strong and they're pushing down because the yields are exploding, the DXY is exploding, the CPI print is coming out later in the month, the Fed meeting, it just goes on. But if we get above this 3.29 and confirm that, we could be going very much higher very quickly. A lot of people say, you should have certainty. Is it going up? Is it going up or is it going down? Well, it really depends on your timeline. If I said, yes, it's going up, and you were in this timeline, that's good. But if I said it's going down, you would say, yeah, because you're in that timeline. Price is always moving in a wave. You must break out of that retail trade perfection mindset. It will destroy your account. The fear and greed indicator is currently 63, and this is really good. We need to take extreme greed out of the market. All those people YOLOing and just FOMOing into the market cause the market to retrace very substantially. And we can see we've had $183.5 million in total liquidation across the crypto market. 123 million were short liquidations. The longs and shorts are always whacking each other. And the largest single liquidation order was $3 million on ETH. Ouch, that would have hurt. There are so many people going through life pullbacks at the moment. Please always have hope. The sun will come out again, and our community's love and healing thoughts are with you. You are not alone. When you go through loss of any sort, it's really hard to take. These life pullbacks are just like price waves inside the markets. Life is always moving in a wave, from downtrend into uptrend. You need the downtrends to consolidate your strength, to build new skills so you can participate in the next life rally. It's just like the markets. Unfortunately, a lot of people have longer pullbacks than they need because they're holding on to things that don't work for them. There are many intelligent people that just don't see what's in front of them. And for example, Bill Gates held on to the concept that the internet was a fad, and his software business got hammered because of it. If you remember Netscape, just drop a comment. Those were the days, my friends. And Thomas Watson, as the chairman of IBM, said he really messed it up. He said, okay, I'm a computer manufacturer. There's going to be a market in the world market, for maybe 5 computers. Not quite right. But he probably wasn't wrong by that much. Hang on a second. 250 million computer sales on average per year? Thomas. It's good to think like this, because if you're going through a life pullback and you need to let go of something, it's important to let go as soon as you possibly can. If it doesn't serve you, if things need to change, if you need to change, just drop it and move on. That will start your next life rally. All results come from the mind, and a better mind creates better outcomes, with better habits creating a better life. One of the best habits you can possibly have is to know that opportunities and life reset daily, that life pullbacks are giving you the strength for the next life rally. You either win or learn, and if you blame, you lose the lesson, so that particular problem will come back to haunt you at a higher level of pain. So learning is important. It's vital to keep your pain low. And knowing the universe wants you to succeed is really important. It does. You're a completely unique human being. Nobody can be you like you can be you. Don't worry about competing against other people. They've already lost. They cannot be you. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now. Oh, you're still here. You are very special. To let me know that you've made it this far, please let me know something about learning. Just make a comment about learning and I'll know you made it. You are awesome. Have a great day.